So the Fed recently cut rates. They've been signaling that this is going to continue now. Does this mean the end to the recent popularity of money market funds? We're going to ask financial advisor Frank Oliver on today's show.
Welcome to the T.I.M.E Blueprint with Frank Oliver of Oliver Asset Management. Here we break down taxes, income, money, and estate planning, giving you the tools to make informed financial decisions and aim for better retirement outcomes. Your host is financial advisor Frank Oliver, the president and founder of Oliver Asset Management. He's the author of Your Time Is Now, sharing the essentials you need to know to craft a comprehensive and customized retirement plan. Dive in with us as we offer clear strategies and straightforward advice, all designed to empower you in your financial journey. Welcome to the T.I.M.E Blueprint.
All right, Frank. So when interest rates were rising, people actually started making money on, their dollars that were in money market accounts and savings accounts and things like that. Actually, we're making more than 0.01% or something.
For the first time in a long time.
Yeah, they became pretty popular over the last year or two. But now with the Fed starting to cut these rates a little bit, is that popularity going to go away?
Well, I think the popularity is going to go away, but I think that's does come back to having a good plan. So, and I don't think we're going to see money market accounts go from, we're getting about 5.25%. I don't think we're going to see them go from 5.25% back to, 0.25% overnight. They're going to slowly come down. So I think that there's still, some opportunity to earn some money on your cash for the next couple of years, depending on how fast the Feds are going to cut rates.
Yeah.
But again, I think what we think of is, or I think what we all need to think of and keep in mind is, you still don't want to be too cash heavy. I know getting 5% in your cash is nice, but while we're getting 5% on our cash over the last 2 years, the S&P 500 has been up 60% over the last 2 years. So folks that are still scared of the markets have missed out on one of the greatest bull runs we've ever seen because they went at 5% on their cash.
Yeah.
So, as money market funds, as the interest rate on those funds come down, I still don't think it's prudent to have too much money in cash. It's nice that if you want to have, 6 or 12 months emergency expenses in cash, that you're actually getting some interest on that. I think that's great. But you don't want to miss out on these. I mean, we've had 20% years in the market, so, again, still having too much money in cash is not a good idea.
So that's appropriate, but we don't want more than what's appropriate.
That's right. Yeah. And rates are going to come down. But the economy's on pretty strong footing. Inflation has come down. So I still think that we're in a pretty good spot to invest into some equities. And there are always good, safe areas to invest. Doesn't have to be cash. There's some fixed annuities. CDs are going to come down as well. We use some structured products that also we're getting, sometimes double to triple what fixed interest rates are on CDs, some bonds, fixed income instruments or money market funds. So there are some really good, safe, principal protected areas out there that when the money market funds, the rates do come down on those funds, I think we can still get you, above 5% pretty easy on that.
So look into some alternatives. If, those money markets are still kind of attractive to you, there could be more efficient alternatives out there.
Absolutely.
That can do the same thing maybe and more and be a better fit for your portfolio. Yep. So always a goal to have the right amount of balance between cash, and we also want to think about taxes and income and even the estate planning portion of your financial plan. Each of these things we talk about here on the show are usually just one layer of that entire sort of retirement cake that you're making.
Or you just choose an onion.
Yeah.
Layer after layer after layer. That's right.
Layers on layers. And this is a great introduction, by the way, to checking out Frank's book, Time Is Now. It's a great opportunity to learn a little bit about some of those things we just mentioned, how taxes, income, money, and estate planning all fit into your financial plan as a whole. This book is actually filled with insights from seasoned financial professional Frank Oliver. Great resource for aligning your plans with your retirement goals. If you want to make some more informed decisions about your financial future, get a copy of Frank's book. You can actually get a free copy. Click the link in the description of today's show. We're giving out a couple of free copies to the first few people who click the link today and order that book. So if you want to feel more confident in your retirement strategy, start with some more education. Pick up the Time Is Now book from Frank Oliver. Frank, thanks for the help today.
Absolutely. Thank you, Walter.
We'll see everybody next time on the T.I.M E Blueprint.
Have a good day.
Advisory services offered through Creative One Wealth, LLC, a registered investment advisor. Creative One Wealth, LLC, and Oliver Asset Management are unaffiliated entities. Licensed insurance professional. Respond and learn how financial products, including life insurance and annuities, can be used in various planning strategies for retirement. The information contained herein is based on our understanding of current tax law. The tax and legislative information may be subject to change and different interpretations. We recommend that you seek professional tax advice for applicability to your personal situation.